You say the S&P 500 is going to reach 7,000. It's currently 5,900. When does it hit 7,000?
Hang on. Let me go get my calendar out, and I'll tell you exactly when. I think sooner than later, which I guess that's not super helpful. But, I think what we're seeing here right now is, there's an old saying, what we learn from history is nobody learns from history. I think Abraham Lincoln said that. No, just kidding. It was George Hegel, a German philosopher. And I think what you're seeing right now is the animal spirits are out. The S&P 500 trades at 22 times forward earnings, which is historically high, by the way. That's where we saw it like around 2001 after tech bubble burst. And actually got up all the way up to almost 25 times forward earnings back then. So I think there's a good chance we'll get there again. We're seeing money just plowing into the market. You had like almost 60 billion going to ETFs, mutual funds last week.
Last week, 60 billion?
Yeah, insane, right? In 1 week. You could have $1 trillion going to mutual funds and ETFs this year, which is a huge record. And where is that money going? Is blindly going into the S&P 500. So if you use the same metric, if we get to the same crazy multiple we did back in 2000, that gets you to 7,000 on the S&P 500. So I think that's realistic, and it's probably going to come sooner than later, meaning like maybe before the end of next year. So, we're in kind of a melt-up phase, I think, at this point.
In a melt-up phase, that's what I was waiting for. In a melt-up phase, I like to hear that. Very specific. See, I want to talk about Nvidia. They report Wednesday afternoon after the closing bell. There are reports this morning that some of their Blackwell chips overheat in some servers. Know anything more about that?
They've had some problems with it. I mean, they really haven't done a big rollout yet. That's going to be sometime in January, and get an idea basically when they're going to actually roll that out, because that's going to be huge for forward numbers. But I mean, they're going to destroy their numbers. Like, they're up 80% year over year for revenue and earnings. That's like incredible. And if you look at like Microsoft, Amazon, Alphabet, they're plowing so much money, and Meta as well, like $233 billion into those AI chips this year, into infrastructure spending for AI altogether.
Who's spending $230 billion for AI chips? As much of that going to Nvidia?
A lot of it is, right, collectively, and it's going to go up to something like they're estimating $310 billion over the next 2 years. Now, that's what we're projecting, but I think a lot of this demand is probably front-loaded, and every analyst has been so wrong, just constantly raising their estimates because they've been so behind. And my fear here is they're not going to tell you when the party stops. And the demand's been so great, for the last 2 years. At some point, that party is going to stop. And I feel like at this point, you're probably getting late to the party if you're starting to just jam your money into big AI stocks like this.
I know a lot of people who own Nvidia stock and they're not selling.
Well, what
they don't want to pay the capital gains tax, so that's part of the problem.
The old saying is pigs get fat, hogs get slaughtered. I take some profits here. It's up literally 185% this year. Just saying.
Just saying. Right, Ryan. You're all right? Thanks very much indeed, sir.
Thanks, Stuart.